Hello, folks. Brandon Chapman with you for another Monday TheoTRADE video. Monsters of Tech get squeezed today. Gamma squeeze the Monsters of Tech as UOA rallies market. When I say UOA, we're talking about unusual options activity. A lot of call activity across, Amazon, Microsoft, NVDA. We'll look at a search here and some of the results that shows where those areas are, and kind of look at the upcoming banking earnings spree that's about to come up in the next several days, and some bearish trades that are occurring in the regional bank space, specifically in Ozarks, Bank of the Ozarks, OZK, and also US Bank. All right, folks, let's get rolling here. So the S&P finished, as we look at the SPY over here, 1.05% higher. The futures are minimally higher, that much more after the close. That just barely happened. But you notice the leadership today. Cyclicals leading out, communications in there, industrials. Notice technology is kind of falling back here just a little bit, and energy at 0.69%. But let's be honest here, everything's getting lifted today. And as we look at gold, we can kind of see why just a little bit. So notice gold today is down about 0.49%. Sorry, I guess it's not a point of why. Dollar stronger. So what's happened last week, you notice this big jump here in gold. That was a result of dollar weakness. As we look at the S&P last Friday, you'll notice something here, right? The S&P was down. So when we actually look at that, gold was up nearly 3%. The S&P was down. It really pointed to significant weakness in the S&P on the order of magnitude of close to 4%. And it was masked over because the dollar was down vis-a-vis gold. And what does that mean? The dollar in real terms was down significantly. And the S&P did not sell off as much because, again, the dollar was down significantly. And so all of a sudden today we see the S&P is up 1% while the dollar is maybe up 0.5% against gold. And so erasing some of that weakness last week. So what's happening today in the market is that the S&P is just kind of bouncing back after a really ugly last Friday. And again, it didn't look as ugly because the dollar was down so significantly, gold reflecting that devaluation by being up significantly. Even stuff like if you look at the UP references the dollar against the euro. The dollar was modestly stronger against the euro, about a 57% weighting to the euro. And so as we look at this, we can see, last Friday was ugly. And you can see that by looking at skew. Skew made a big tick up from about a 136 up to 144. We saw significant hedging on Friday, again, into that kind of underlying current of weakness. And today we're just seeing it kind of snap back just a little bit after a pretty weak Friday. And as we look at where we finished the day, we did not even finish above Friday's high. So again, how strong is it today? Well, what you saw in the options front was a lot of option activity for this week on a lot of the big names. And what that means is they're looking to try to take the market higher here this week. We will see if they succeed. And again, we could look at the high from October 12th on the SPY at 437.34. You could look at SPX, for example. SPX, the high on this date right here of on the 9th at 43.41. The expected move, I don't have today's expected move, but we're probably looking at an expected move somewhere around probably 44.25-ish up in here. And again, could we get there? Absolutely we could, right? But again, we want to see whether or not the market breaks out. There was a significant print going back to September 12th at 447.18 that added to a particular transition point for the market as we broke through it on the 15th and began this pace of selling. Maybe we could rally towards that area. That would be up above the upper expected move. It could create excellent opportunities to sell calls this week. But again, it's all a function of what's going to happen. And right now, it's about a 50-50 bet whether we go up towards 445 or down towards 420. I'm going to err a little bit on the side of being down, maybe 55-45. But again, as we look at the scan tab, this is a search that I use. We're scanning the weekly options here, and I've sorted them by symbol as opposed to by industry, which takes out the options part of things. But if you look at where the trade is, These are both calls and puts. But again, Alphabet, we're looking at Google, we're looking at Meta. Of course, that's communications. As we look at other areas here, right? Information technology, AMD, Intel, NVDA, these two in particular, AMD and NVIDIA, saw significant call option activity. As we look down towards consumer discretionary and staples, right? As we look at, where's Amazon here? Amazon right here in consumer discretionary. So again, a lot of these big cap names, these monsters of tech that fill in cyclicals and communications and to a lesser degree technology, because Apple was down today on its own news. The fact they're maybe seeing less traction in terms of iPhone 15 sales in China. So we'll see how that plays out. So this is kind of the outlier here, but Microsoft today is up about 1.5%. Fading from the highs here. So what we're seeing is a concerted effort to try to create some sort of gamma squeeze to the upside. The only question of whether or not it ends up being successful. So for example, in Microsoft, if we look at the October expiration here, we're going to come down to the 337.50 strike. So ended up being now a little bit out of the money here, but 19,000 against 4,000, mostly bought early. And again, the notion being is that, look, we're trying to create some sort of gamma level at 337. We start to break up that. We may see break above that. We may see further buying pressure. And again, where's 437.50? Notice our 437.50. We're towards the high of the session. We got the highs back here as well. But the point being is we have a level at 337.50 that could be relatively significant. So if we take out today's high, we might see it push through that and help create some additional push in terms of the squeeze, since we saw maybe a little more of a lopsided day today in the October expiration for this week, 4 days left. Another one, again, we'll look at technology. We'll stay with NVIDIA, for example. NVIDIA also similarly, the 20-oct expiration for NVIDIA, the 460 strike price out here. So you'll see 36,000 contracts basically finishing at that same level at the money today. We start to break through 460. It could create an initial push, driving us back towards the August highs in NVIDIA. We could look at AMD, another technology stock, right? Breaking out of the downward sloping channel, a series of higher highs and higher lows, looking to form another higher low at a projected area of support if we draw a trend line here. So again, we're testing this area. We're firming up today. And as we look at the trade in AMD, this is an October expiration, again, 20 octs. The strike price is at 107 here. You see, we finished basically close to that close to at the money here at 107. But we have this level, right? Start to break north of 107. This could help create a squeeze, pushing us back to prior highs and helping lift markets for this week. Again, we could look at Amazon in the consumer cyclical space, which was the best performer today. Amazon up 2.13%. Notice how we came back on Friday. We tested the high from the second. We're firming up today. As we look at Amazon, again, this is for October, right? We'll just kind of center on this kind of 133 strike here. 35,000 contracts trade against 8,000 open interest. And again, we create this kind of gamma squeeze level at 133. Start to break through today's high. We could squeeze higher and push towards the 136.90. If I flip this around, that'd be a 61.8% retracement. So again, as we look through these names, and again, you could continue to look through a lot of these areas, these big mega cap names that are so influential, okay? And all of these are for this week, trying to create that additional squeeze. If we break, we see those break in the money, may help push markets. As we turn it back to the S&P, we'll look at the SPY. Where could it carry us? Could it carry us back to 447? That might be a bit of a stretch unless we see broader participation, but you're definitely seeing today the desire to buy calls in these big names to see if they can drive this for the week. And if they fail to do so, right, we may see this unravel and we could readily break lower. Now, what could be a catalyst for that? Well, guess what? Look at the scan tab here and we look at financials. We have some, Coinbase is in here, but notice we have, Morgan Stanley, we've got Schwab, PayPal, EPO, BAC, Bank of America. There's been a lot of bearish activity in that space. US Bank, This is a trade that was on today. And again, we could sort by symbol here and we could try to break down where that area of weakness is. But again, if we scroll down to USB here, you'll see what, this is showing the call. Let me show you the put side of it. I ran this search, man. I have lots of different variations of this search, but we could come in, let's look at USB and let's see what we got. And so as we look at this, we're going to focus on USB on the put side ahead of earnings. This is an October expiration down here at the 31 strike. Okay. Is it possible there's some call activity to boot? Yes, it's possible, right? On the put side, we're popping up 75%, 69% of the bid on the call side. I'm not sure, right? But we're looking at 20 oct, 5,000 contracts, could be put sold, but if we look in here, let's focus on the 20 oct again. Put side, let's just confirm it right now. 31 strike, looks like a lot of puts being sold. So maybe that 31 is more sell side activity. Thought I looked at it earlier and it looked more like buy side. So we'll come in, we'll look at see what transpired. How did it move the stock? Was there any sort of gamma impact? Anyway, I'm circling back to this from earlier this morning, but as we look at this again, we had at 808, we had about 5,000 contracts. And if we look at kind of what transpired at 808, did this kind of, and you see any big movement? Not really, right? So maybe this is put selling ahead of the earnings. I mean, when you look at US Bank, there is an expected move today, market maker move about $1.30. The expected move for this week's about $1.60. This is, regardless, going to be a potential mover. And in fact, if we look at KRE, which is the regional bank index, what we're looking at this week, we're looking at an expected move of $1.35, market maker move 44 45 cents. We look at Bank of America, there was a significant amount of bearish activity last week in it. Market maker moves about $1.03. We're looking at the expected move about $1.20. Bank of America, if we back this out here to 1-year daily, you'll see that it is announcing tomorrow. So we do have a slew of earnings, not just Bank of America, but US Bank. This one is on the 18th before the market open, and another regional bank. This is Bank of the Ozarks. This is going to announce on the 19th, I believe, and then they have a conference call on the 20th. But Bank of the Ozarks today, if you look at the October expiration at the 35 strike down here, and let's double check it here. Statistics: 19% at the ask, 9.5 times the average. So a lot of it between the market. And as we look at just kind of quantity here, again, you'll see 1308.21, 30 put, 40 put, some 35 puts in here. Again, my expectation, these are long puts coming in ahead of the earnings, and that very well could also be for Bank of America. Again, when I looked at it earlier, seemed like it was buy side activity. Looking at it now, it's a little more mixed. But the point being is this could be a very potentially busy week for banks, and this is something that could push the market and may help move yield. So, for example, 10-year Treasury yield sold off today. It was higher on the session. Prices were down. And again, this moving higher and seeing the curve flatten actually benefits banks. We saw earnings last week from JP Morgan, shot up bigly and then fell back. We're down today. Stocks like Citicorp gapped up on Friday, closed down, open higher today, finished lower. And as we have more announcements from the banking space, do we see more like Wells Fargo, or do we see more like Citigroup? And especially as we get towards regional banks, what kind of money are they setting aside? What's happening to net interest margins, net interest income? JP Morgan certainly helped from acquisitions that were kind of forced through from some of the banking failures in the spring. Does that necessarily come about, or does this affect regional banks more positively? So KRE, trade, kind of a trade idea here. And again, it's one that I put on earlier today, just looking for a downside. I don't know if it's going to work out or not. Just like any trade, there's no certainties, right? But one of the nice things about bearish spreads, vertical spreads, is that the skew is generally in your favor. I mean, you're buying lower volatility, selling higher volatility. But for November, giving it a little bit of time to come around here. But the 41.39 here seems like a reasonable risk to take, assuming that regional bank earnings come out maybe a little bit on the downside. We see a bit of a sell-off. Maybe we see a jump initially, and then we see some selling in the next 30 days. Again, this is a space that's certainly been racked because of Treasury selling. And when do we start to feel the real effects of this second sell-off in Treasuries that obviously is hurting these banks? They have access to the Fed's window program to be able to add liquidity, but how much is that going to paper over the underlying risks that appear to be present? And we'll see if they're finally manifest in this earnings. So Bank of America, we got US Bank, we got Bank of the Ozarks, all kind of on this skewing a little bit more bearishly ahead of their earnings this week. And that may unravel any sort of positives we're seeing. But obviously everything comes back to the dollar too, right? So does gold rally? Does it fade? This is going to give us a big indication of the next step for the dollar, right? If we start to see gold rally here, it's dollar weakness. If we see UUP or dollar index higher, this is going to be very negative for the markets, or negative, setting up for a very negative event for the markets. So again, but we're seeing this juxtaposition, bank earnings and some bullish bias, and trying to create some gamma in the monsters of tech. Bitcoin today rallied sharply. This did not exactly, we faded from the highs here. It didn't really drive, you go back here a ways to the 29th of August. We just didn't see RIOT and Mara drive as hard as you might have hoped or liked if you're bullish on these names. And if we look at November here, the $9 strike price is now basically slightly in the money here, 42 cents. Some buy-side activity in RIOT. A little over a week ago, we saw it in Mara as well. And we're just seeing this kind of back and forth, looking for this thing to maybe rally towards 11, which is about a 50% retracement on the sell-off from the high down to the low back on the 27th. So near term, looks like some bullishness in RIOT and Mara, Bitcoin. But again, you might look for taking out the high. And if we do, we could get a short squeeze on a general bullish dynamic or bullish move in the markets for this week. I put DQ. I meant to put DO in my notes. Not Diamond Offshore, right? DG is what I wanted. Dollar General breaking out yesterday, higher again today. And in Dollar General, if we look at the October expiration, again, relatively short term, right? For this week, could end up getting faded, but out here at the 118 strike. So again, we're seeing some potential gamma. The difficulty with all of these names we've covered is that the vol skew is very unfavorable, right? Now for DG, if you go relatively short dated, it does balance out here. If you're looking at kind of that 116 area, you might be able to buy a 114 and sell a 116. But as you get out more in time, you'll see the volatility does kind of level out here as you're getting towards 125, which means you got to target a bigger move here for those out of the money verticals to work on something like a Dollar General, or most all of these names we went over in the monsters of tech. You may have to buy calls, right? Or buy the stock. There's relatively high skew, as we talked about on Friday. A lot of hedges being put on into that day, right? It was a pretty negative day. A lot of hedges being put on as the skew went up. XLE, wrap this up. Sorry, XRT. XRT today got a nice bid bounce here, up 2.7%. Retail obviously very oversold, but the question is, are we seeing a little bit of pause here, consolidation in the price? Does this turn out to be kind of a inverted head and shoulders, and we break through kind of the high from October 11th to go higher? Well, today we did see some bearish trade in XRT, a roll, and as we look down here at the time in sales, you'll see this roll here from a let me sort of by, there it is, sort of by quantity. Anyway, this is XRT. So in XRT, we're seeing a 59, 30, 53. I got it set for the wrong. I'm like, where is it? Here it is. A December 1, buying the 59, selling the 53, rolling out that 60 put out to a put spread for 1 December, and targeting more downside, 53 down here. So again, that's a spread that has a low probability, but it doesn't have to move far to break even again. But the skew means those out of the money puts are relatively, are relatively expensive to sell. And so you can see the wide spreads in here. So you might pick a different stock to trade XRT, but what you're seeing is a bearish trade being put on in XRT today, a roll just extending the time frame and extending the downside here at XRT. Let's finish up with oil. So oil today did rally. Did rally initially, faded from the highs. Again, where's oil going? Again, I don't know, but I do know is that the term structure of oil is in backwardation, which generally points to the crash risk being to the upside. And again, unless we're seeing a diminished economic outlook here, but if inflation fears start to turn, we see a rally in the market, oil could readily retest our highs at 95 again. The trade in XLE, again, just taking that kind of limited risk trade to the upside in XLE as a sector ETF. This was a 27 oct next week. And we look at the trade here, right? Buying the 94 calls. So again, that's a decent upside move here. And if you come out to 17 November, you could construct kind of a reasonable vertical spread, call vertical spread on these out of the monies, targeting kind of 94 to the upside as the vol kind of flattens out up here, even a little higher. You could even extend the time frame to December to give more time for that move to transpire, and maybe even extending it up a little bit, even out to like 97. Like for example, so kind of extending out 97-ish, 98. Just looking for a little bit more upside on XLE. Again, you can see the impact of skew pushing that vertical further out of the money, which does make it tougher. But again, this could be a stock trade, not enough skew really for a back ratio spread. But again, it's representative of some of the bullishness here. But again, 150, 155 could be an upside spread here. This was a roll for 27 oct. So we'll come in here, just kind of rolling 27 oct out here, rolling out to the 155 strike. So again, looking at 155 out here just a couple of weeks. Again, you could construct a spread here. Buy the 152.5, sell the 155. That'd be a reasonable spread. 11 days. You need this to get up to 155 here, which seems pretty reasonable. Well, folks, got to wrap it up there. We'll catch you back next week on the video. Hope you have a great day, and we'll catch you.